for lack of a better word, is good. Read it right. Read works.
Hello, everyone, and welcome to episode 24 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out, we had a bit of a roller coaster. We went from 72.4 down to 65 trillion or so, and then back up to basically the same level, 72.4 again. And we did a lot of interest rate swaps. We did a lot of options and other things, commodities trades. And in between that episode and this one, I have made some more notes. And I want to make a big change with regard to HeartMax. But before we get to that, we need to balance out our interest rate swaps. And what I mean by that is, in the last episode, we did a ton of short swaps. And they were all at around the 6% level. And despite the fact that we have an easing policy, our interest rate has gone up to 11.75, and the yield on the short bond has climbed to almost 9%. So if we now input long swaps at 9%, we will be guaranteed some kind of profit anytime that the short bond yield is between 6 and 9%. And when it isn't, we will basically break even. So it's a way of making sure that you don't lose, you only win. And so what we're going to be doing is we're going to go to each of our insurance companies and we're going to be entering in long swaps for the same time period as what we did on the short swaps. We're going to make them for whatever the short bond is, and anytime that the short bond is between 6 and 9%, we should be making a profit. And whenever it isn't, we should be breaking even. So it's basically a win or break even situation, which is always better in terms of risk than a win-lose situation. The only question is whether we want to go ahead and make these all the way out to the end of 2026. And the reason why I say that is I typically suffer from high interest rates. I usually grow my companies at a rate faster than what the game thinks is normal. And when we grow faster than what the game thinks is normal, it raises the interest rate. So one of the things that we could do is we could make the long swaps for a shorter duration, say ending after 2 years instead of 4.5. If the interest rate is still real high, at that point, we will simply be making money off of the short swaps. And if it's low, if it looks like it's going to be low, we can try to find a good time to do some more long swaps. But it's not always easy to find a time to do that. So it would be a bit of a risk to make this end before the short swaps do. All right, so I think just for safety's sake that we're just going to go ahead and enter them all the way through the end of 2026. It's not the only time that we're going to have to do these. After 2026, we can do some more. So I think I'm just going to go the conservative route and make them all the way out to the fourth quarter of 2026. So let's go to RakeM Insurance and then go to our interest rate swaps. We're going to base it off the short term. Long position, 500 billion. We're going to start at the same time as the others and end in the fourth quarter of 2026. When we do an offer, hopefully they won't come back with a counter offer. Oh, shoot. I did say long position, short term. All of your terms are acceptable except that the fixed interest rate that RakeM Insurance would receive would be 6.44% rather than the current yield of 8.99. Does not reflect the professional courtesy discount usually given to insurance companies. I could say yes to this, but then the margin for making money both ways is so narrow. Wonder what it would do to us on the bank prime rate. Then it would be 9.2. 9.2. All right, I think I may wait. if we're going to be dealing with a 0.1% margin between long position and short position, let's let this go up some more. Let's wait. All right, so let's deal with critical item number 2. Critical item number 2 is that Hartmax is in the integrated oil industry, and we are currently trying to take that industry down. So if he's in that industry, his stock price will not climb. Let's go over and take a look at him. So right now he's worth $52 a share, and he's only trading at 41. And the problem is that we want to basically kill the returns in this industry so that we can make money off of all of our short positions on these stocks. And if we do that, Hartmax will never climb. His stock price will not climb, and we need it to climb in order for us to make money on the options that we have on him. Itochu has options on him. And then furthermore, we have sold these other stocks short and bought put options on each of these, and we need their value to go down in order to make money there. So what we're going to do is I'm going to buy Berkshire Hathaway away from the bank. It's a holding company. Either that or I could buy actually, Berkshire Hathaway has tax loss carryovers we want to preserve. Let's buy Burlington Resources here. And I will give him some money to work with. Let's see, who has a lot of cash besides me? So Mitsui has a bunch of cash. I'd like to have Tokyo do it, but he really doesn't have enough. Let's have Mitsui Marine and Fire buy Burlington Resources. Have it contribute about $500 billion to Burlington. And then Burlington will buy Hartmax's assets, and then he'll buy another 300, maybe 400 billion in assets off the shelf, so that all the returns in there turn to garbage. Right? So let's start with buying Burlington. All right, so that's 95% of it. Let's buy the other 5%. From Energy Resources Fund. We're going to give him $500 billion. And now we will have Burlington buy assets from Hartmax. Okay, Burlington has $360 billion left, and there are currently $1 trillion in assets. So if we add 30% more, that should really take those returns down. So let's buy $325 billion. Boom. Negative. So now we should start to see a drop on all of these. And if we go over to Hagemeyer, you see he's currently losing money. Okay, so we're making money on that one. We're breaking even on Exxon. We're losing money on Total. Losing money on Conoco, losing money on Texaco, and the ones that we did last episode we're losing a bunch of money on. So by having their earnings go down, hopefully the value of these options will go up. Let's just check and see what we need to do management wise here. So we'll take the growth rate down to 1%. Dividend we'll leave alone because he's not really going to be making any money for a while. We're very incompetent, so let's see, how much do we want to increase this? It's going to lose money for us, but we want to be able to come back strong when the industry does recover. So we're going to make our growth rate, let's make it 0. and our R&D, let's make it 21%. And we'll revisit that after a while. All right, so now we need to decide what to do with HeartMax. And what I did was I went to each of these industries, starting at the top and working down to see which ones have a decent growth rate. You know, what can we make some money on? And I was hoping I could find something before we got down here as far as the real networks. And the one that looks best is Alpha Industries, which is semiconductors. The returns in here are not the greatest, but everybody's growing kind of conservatively. A lot of them are growing negative. The industry growth is moderate, but there's a lot of companies here that can be bought for less than their net worth. So what I want to do is, starting with Texas Instruments here, then going to American Micro Devices, Hitachi Semiconductors, Xilinx, ST Microelectronics, and Applied Materials, if he's not wholly owned. We're going to buy as many of those as we can. And if the opportunity arises, it looks like Intel Corp here is out of credit. If his stock price goes down, and it looks like it will, we'll pick him up as well. All right, but that's going to be a little bit down the road. It's going to take some time for his stock price to go down. So let's start with Texas Instruments. And because we are a holding company, it did not give us the option of liquidating him, so we have to do that manually. And we're going to lose tax benefits of $122 million, but that's fine. Right, so now that we're officially in the semiconductor industry, it should ask us if we want to liquidate the rest. And we will. So there's us. So here's next, American Micro Devices. Our interest rate on, or the yield, is up to 9.09. I'd like that to go up to like 9.50 if we can. All right, so next up is, let's do him. He's lowest. He's got the best value. All right, let's see where we stand. Let's pay off this loan and buy back the bonds. Alpha Industries is up. Oh, that was 200 billion. We've shorted the index and the interest rate's supposed to be coming down. Let's cover these two right here. Making money on these too, but I'm not going to cover those just yet. We may wait until we have more money. So Hitachi Semiconductor would be next. So let's buy that one. We're up to 35 billion in assets. Right, Applied Materials is 100% owned, so we won't be buying that one. Let's buy the other 3% of this one and merge them in. Still got 15 billion. See how big Xilinx is. 3.5. You can afford that. All right, let's buy these bonds back and put the rest towards our loan. All right, industry growth is at 7%. Next semiconductor here is just killing it. So let's just mirror what Alpha Industries is doing. We'll give ourselves a 1% dividend, a 1% growth rate, and a 10% R&D. We'll do the same for Xerix down here. Let's see, I gotta see what our stock price is. All right, so 44 cents is gonna be our dividend. All right, let's see how we look. So we're still positive by a little bit, and down here we're making a nice return. So we'll just stick with that for now. He doesn't have much in the way of debt, so he can grow like crazy. Growing at 52% and has 96 billion in credit. All right, so let's go back over to HeartMax and make sure that we don't need to like cancel any swaps or anything. All right, so we've got crude futures that we're making money on, which is good. I think we have physical crude as well. And we do, and we're making 46 billion on that. And as far as options go, we're losing money on Exxon, but we just bought a bunch of assets there, so his value should go down. So let's just cover this one. We're making money on it right now, and we'll just buy that one back. Just 13 million. But we'll get it off our books. The rest we'll hang on to. Hopefully oil keeps going up. Okay, I'll fix my spreadsheet later, because we're going to have to put Burlington Resources up top here and move these around, so I'll update it later on. We should probably have Burlington Resources do something with oil since it's going up so quick. Holy cow. That dropped in a hurry. I haven't seen it go up and down that much so fast. Okay, let's take a look at our policy. Still easing. It's going to mess us up if it doesn't go up between now and the second quarter of next year, so basically around the May or June time frame. The actual payouts for those swaps will occur on June 30th of next year, so we've got 6 months for this to go up, and it really just has to be above, I think right at 6% is where it needs to be for us to not lose money. Alright, so just a couple of things. First of all, we're going to be buying some wheat. Let's see who has cash. We need to check and make sure that the bank has enough cash. It does. So we can have, let's see, do we want Nomura to do it? Let's have Burlington do it. Or I can do it. I've got plenty of money. These guys don't really have that much money, which is normally a good thing. Alright, Burlington's got 46 billion. Let's have him buy wheat futures, and we'll see how many we get, and if we start running out of counterparties, we will also buy where we will then buy physical wheat. All right, so I'll fast forward while I'm doing that, and I'll be right back. So 382 was considered an extreme price, so I just had it buy physical wheat. And basically we want to sell that as quickly as possible because there's some attrition involved with wheat and corn. But these other two are not at a point where we can buy or sell them. So like gold, we buy it at 1,000 and sell it at 2,000. Silver, we're going to buy it at 12 and sell it at 24. And crude is right in the middle of its cycle. I like buying it below 50, selling it at 140 or above. And we have a couple, as far as the index goes, we have a couple of things that are diametrically opposed. One, we have an easing policy, and yet we have an interest rate that's climbing. It's gone from 10.75 up to 11.75, and until it either drops or the policy changes, I don't think we're going to see a lot of movement on the index. Now, strictly speaking, this is a low number. It's just that it takes a lot of money to invest in that, and I don't want to have it tied up for long periods if I don't have to. So I want to wait till we're closer to some movement on it. So what we're back to doing then is we are back to working our stocks. Well, I guess I could go ahead and buy some wheat too. Do that real quick. All right, and if corn falls below 350, we'll do some of it. Oil just fell. All right, so before that turns down some more, I want to sell off half of the physical commodity and half of the futures. So I'm going to sell half of all this stuff, and then half of my physical holdings. I'll do that for all the rest of these that have oil commodities, and I'll be right back. We may have missed our window of opportunity on the short bond to do long swaps, but we'll just keep an eye on it. If it goes back up above 9%, we'll try again. Or if the prime rate gets up above, I guess if it gets to 12.5% is when we would want to do it, because the counter offers are generally about 2.5% lower than whatever the current rate is. And so if we can do long swaps at 10%, I'd be happy with that. All right, so we're going to work our stocks next while we keep an eye on our commodity prices. But first, let's go to HeartMax and pay off his loan. He has $50 billion in cash. We're just going to pay the loan down. Okay, so get rid of that. Let's go over to Fujitsu. His income is up and going up some more. What we have here is we have Lenovo just growing like crazy, and yet our growth rate for the industry is kind of low. So I'm just going to lower the growth rate here to 1%. And we're also going to buy ATI. First things first, let's lower our growth to 1%. We have 16 billion and we own 33% of Matsushita, but we're going to be getting rid of that here soon, and I'll show you later when we get down there. So let's take a look at ATI. He's worth 2,600. So let's just buy him and liquidate him. Pay off the loan. And let's go ahead and get this one too. We're reasonably competent in spending 8%. Which is fine for right now. We don't need to invest more money in R&D. Let's wait till he tops, until he runs out of credit. It's gonna be a while probably. All right, our short bond has gotten back above 9%. Let's go over to RakeM and see what the counter offer is on long swaps. $6.58, which is still pretty narrow. If I were to do it at that rate, I wouldn't want to go all the way through to 2026. I would just want to do it till the second quarter of 2027. And that way we're just protecting ourselves at the beginning and hoping that the rate goes back up by the middle of next year, or excuse me, not 27, it would be 23. So if we had to weather the first year of low interest rates, we'd be protected against low interest rates for the first year of those swaps. Because if the rate goes down, I'm sure it'll go back up. How quickly we're going to grow, especially with low interest rates, we should go pretty quick. The question is, do I want to spend an hour putting these in for something that may or may not happen? The prime rate is 11.75 still. Oh no, I want I know I'm not usually like sitting on the fence, and I'm not trying to waste your time or anything. It's just I really don't want to do these long swaps at such a low rate. I would rather have them at like I guess about 7%. I think the minimum level of separation I would like would be about 1%. So I'm faced with a decision of whether or not 0.5% is enough of a degree of separation between our short swaps and our long swaps. Okay, so if I only do it for 1 year, it's a lot better. It's almost a full percent. Counter offer here is 6.9. Whereas if I do it for 2026, it's 6.58. So I guess if I change this to 1 year length, of course that would be 5 quarters. Let's make it first quarter of 2023. 6.98. That's more like it. I would be willing to do that. All right, so I'm going to do these. I'm going to do 30 of them at each of the insurance companies, and then I'll do the remainder at the bank. It's going to take me about an hour to put them all in, so I'll fast forward at the epileptic seizure rate of like 64x, and I will be back in 1 minute or less. All right, I've only done the insurance companies so far because I remembered in the last episode that we had 710 of these already, and the game can only keep track of 1,000 at a time. So the most we can get is 290 more. So I did 20 at each of the insurance companies at a principal amount of 500 billion. Now we're going to move over to the bank and do as many as we can. Our short bond has gone up to 9.2, so we're getting a counter offer of 7.05. And basically all it means is that we're going to be making 1% off of all of the swaps net between the long and the short. But we've going to have more short ones than long ones. So if this goes down, we may end up losing money, but it won't be as bad as if all we had was the short ones. So I'm going to go ahead and put in the the long swaps for the bank, and I'll be right back. Okay, we've reached the game maximum of 1,000 swaps. And if we go and look, we have short position swaps and now long position swaps. And the interest rate kept going up on the the yield kept going up on the short-term bond. So we got a nice extra 0.1% of separation on most of those. So now what we've done basically by doing that is we have given up, like for instance right now, let's say the average short swap was for 6%. So we would earn 3.25% on the notional value of those swaps on an annual basis. And what we've done is for the first year is we have traded away 2% of that return in exchange for a guarantee of a profit of 1%. So we have traded 2% for peace of mind, basically. So we're insulated against the interest rate going all the way down to 6% or 4% or whatever, because we're guaranteed to make 1% between both our long and short swaps. So basically now we're protected regardless of what the interest rate does. We're going to make 1% on all of those for the first year, and then after that we're counting on the interest rate being high. And of course, if it stays low, we can always mitigate it again. Hopefully, there's no guarantee that we can, but we will try. And even if we don't after that first year, if it stays low, we can hopefully make some of that money back off of our commodities. Speaking of which, wheat is up to $5.85 now. So we're going to want to look at what our sale price is. It looks like it's going to be in the $8 range, maybe $7. But we need to go and check and see what we think we should do with those. So we didn't buy futures, we just got physical commodities. So here's my wheat. I'm already up 100 billion. And the current market price is $5.90. I think $7 is good enough. That would basically almost double our investment. So $7 is going to be our price to sell wheat. And we don't want to wait too long because there is attrition. We'll lose some to rot if we wait too long. So hopefully that'll go up to 7 pretty quick. All right, gold is almost at its buy point, and silver's getting close too. All right, so let's start working our stocks and just keep an eye on these numbers. If corn goes down to 3, we're going to buy it. All right, so where do we stand with Fujitsu? I know we did some stuff already, but let's take a look. What is this one? Looks like this one is ready to buy. That'd give us a nice market share. Apple is down to 13 billion. Let's see, he's well priced. I guess we do want to buy him. But Fujitsu doesn't have the money, so we'll have to have his parent do it. which is fine because Mitsui has a lot of cash. So let's buy Apple. We'll give Apple $30 billion to pay off his debts. We'll give Apple to Fujitsu and then liquidate him. There we go. 22% market share now. Compaq looks like he's on the way down, so we'll get him next if we can, when his price goes down. And our earnings are going up. Gonna make $580 next year if this holds. And we've gone to very incompetent though. But I think we'll just leave it for now. Our return's just not big enough, and I don't want to spend 21% right now. So we'll just hope that the 8% has some minimal effect. Might be time to buy the index. RakeM's price is way down. Look at that, we're down to 60 trillion. Let's take a look at him. All right, let's wow, he just went down another 2.5 points. Let's try and see if we can buy some options on RakeM, insurance, and then buy the index. So let's see who has cash. Should have a lot of cash because we cashed in a lot of our oil. Nomura has a bit. Hagemeyer has a bit. Know that he's going to have enough to buy options though. Let's see. Let's set it for $23. I don't remember if Goldcorp still has options on RakeM Insurance or not. Let's just make it all the way out and see what happens. Okay, unable to find a counterparty. Let's try for 1%. Okay, let's go over to Goldcorp and see if he still has options on RakeM Insurance or not. All right, he does. He's making money on them too, despite the fact that the stock price is down. And he's got put options also that he's also making money on. All right, let's just buy the index, I guess. Let's take a look at what Hagemeyer has now. He's got about 100 billion to work with. Our value is up on PBR, but not on total or Conoco or Texaco. We still got some work to do. But I think we want to buy the index. You'll have to buy it probably 100 contracts at a time. So we could do 100 transactions like that. Let's see if we can do more contracts. Nope. But that's just such a low figure. I'm going to have Hagemeyer and Nomura and probably our insurance companies all buy stock index. I will fast forward and be back in a minute. The interest rate has shot up to 12.25, so I just want to check our policy. And it has shifted to neutral. So we should be good on our interest rate swaps. Gold is up, and wheat has made it to 6. I'd like it to make it to 7. If it falls back below 6, we'll cover. And we're only getting 35 contracts per transaction on the index. So I only had Hagemeyer and Nomura do it, and I'm going to wait and see if it falls some more because the Cotango is above 20,000. We're going to see what happens with this. As the interest rate rises, it'll probably go further down. Okay, so let's get back to working our stocks because we really need to get this stuff managed. So Toyota America, there are some competitors there that are well priced that we can pick up. This one was well priced until he started going bankrupt. So we're just going to pick up, it's a B credit rating, so we're just going to pick up Mazda here. I'm assuming he's 100% public. And if we need more money, we will have Toyota do this, but I think he's got enough. Okay, we'll buy these back and pay off the loan. We're still very capable. Going at 1%, all that looks fine. Alright, Mitsubishi Electric is next. Got a bunch of cash. The deal here is to increase growth and to unfreeze somebody. I guess maybe I misinterpreted some of these as being frozen just because of their bad credit, maybe. Who would I have unfrozen? Who would I have frozen? I unfroze everybody. Maybe that's an old note. But we can buy Sony here from whoever it is that owns him and merge him in. So that's going to cost $8 billion plus $22 billion in debts. So 41% is owned by the bank. And we can buy the remainder from the public. All right, let's pay off the debt. All right, we've got options. We're losing money on Gold Star. We're losing money on Samsung. Making money on Pioneer. And making money on Toshiba. I'm thinking before we unfroze everybody in here, we probably should have covered our options. So let's see, which ones are we losing money on? Lucky Gold Star and Samsung. And Samsung. So Lucky Gold Star and Samsung is the ones we're losing money on. So here's Samsung. He's rated strong sell because his earnings are going down. Let's go ahead and sell off those call options before we lose any more money on it. Alright, Lucky Gold Star is rated to buy. Went all the way up to 16 and now he's basically at his low point. There he is right here. He's got a good return. And he's growing negative, which is why his stock price is down. He's got a debt issue. Alright, so let's buy those back or sell those off too. We want to go ahead and take our profit. Well, all of a sudden we're losing money on Toshiba. We missed our window on those, messing around with everything else. Let's see. I forget, is it Pioneer? All right, so we lost a little money. A little money, $30 billion. That's all. Just a little bit. Oh boy. Wait, was somebody underpriced? Panasonic's underpriced. If we pick him up for a song, let's buy him. Okay, we're still not growing, and that's on purpose. Let's just make sure we're still very capable, and we are. Let's increase our dividend to 33 cents. Okay, and we're done with him. And the short bond has gone back down, despite the interest rate going back up. He just does not know where to settle. All right, wheat's gone down to below 6, so let me cover my positions there. Sell off all of my wheat. And who was the other one? Was it Hagemeyer that we had buy wheat? Oh, we had somebody buy wheat. I got to go look it up. Burlington. Burlington knows wheat. Total sale proceeds of $70 billion. Well, that's a good start. And oil's getting down to where we might want to buy it. Index has gone down some more too. I'll just hang on to this cash. If this goes down to 50, we'll buy it. Otherwise, we'll just hang on to what we already have. All right, so Mitsubishi Electric's done. Sony is done, which we've merged, so we can delete him. All right, so GE is next. Income is down. And this is where Matsushita is. And we have a lot of good, very well-priced stocks in here. And Hitachi is just growing like gangbusters. So what we're going to do is we're going to buy Matsushita. We're going to buy Sumitomo, well, if we can, Sumitomo, Honeywell, Siemens, and I think this is Philips. We're going to buy all of those. We're going to change our growth rate to a -10 and lower our dividend and see what we can do about consolidating and actually making a profit in here despite his growth rate. All right, so let's start with Matsushita. He is partially owned by Fujitsu. Now let's see what Philips is worth. $34 billion. And he's only got $4 billion in debt, so let's buy him. Let's buy back our bonds and pay off our loan. We have Total Petroleum sold short and we're losing all kinds of money on it, but we're hoping that that will turn around. And we have puts as well. We're making money on those, so we'll just ride those out. We have futures of the stock index that we're making money on. Oh, we shorted it. All right, let's take our profit on that. And then we have crude oil. And I think we'll just hang on to the crude oil. All right, so let's see what we're rated at. Reasonably competent. Industry is worsening, but we're reasonably competent. So let's see what percentage of the market we have now. Okay, dangerously close to a monopoly. So let's lower our R&D to 8%, grow at -10, and the dividend will be 30 cents. All right. We currently have 52.6, so we might get sued here, but I don't think they'll win. I don't think they'll win. We will grow at -10 right now, and hopefully it'll come down pretty quick, especially if he continues to grow at that rate. All right, so GE is finished. Matsushita we deleted. We liquidated. So Mitsui is up next. Our income's down, but we're very capable. Got some excess cash. So my notes here say, buy competitors, lower the growth rate, and buy options. Now that we have unfrozen everybody, I don't know that we want to buy options. We can buy some competitors. We have a 19% market share. We can buy Florida, Light and Power, and might look at this one too, although he was a holding company that's entered this industry. Let's look at Florida. He's in decent shape and he's underpriced. Let's buy him. We're making money on the index. It's still going down. Let's cover it anyway. And we've bought oil, and that will hang on to. Growing at 2%, and these guys are just killing it. Nobody else really is underpriced. Let's look at Corley. Mostly got cash. He's got some stock and some bonds. Neck peripherals and securities company. CLSC right here, 5%. Trading way high. Holy cow, look at this. Let's have Namura buy him. Right now, let's buy him right now. You have commodities and futures, right? So we're losing money on the index. What are our physical commodities? 150,000 units of oil. So we just need the index to go up. Using 100 billion so far. Let's buy these back and pay off the loan. All right, so what were we working on? We were working on Mitsui. All right, we're very capable, spending 8%. So let's change that to 6. Make our growth rate 0. And our dividend, we'll just leave it the way it is. We need to come back and look at this. I guess we could go ahead and pick up Corley. If we sold this, we would take a loss. He is in advertising. We're not really interested in that. And the peripherals is where we have I Omega. Neck peripherals, where is he? Down here. So he's a minor factor. Oh, and he's bankrupt. Okay, let's buy Corley, and then we'll buy the assets away from his subsidiaries by our other various companies. Sell off those companies and then liquidate Corley into Mitsui. Okay, so we've sold off all of our subsidiary stocks. We have 28 billion in cash. We have some futures that we've inherited of oil. So we could pick up Virginia Electric and Power, but I think we're going to have a lot of choices here if we just wait. So I'm not going to buy any more. We are reasonably competent, so 8% is fine. Growing at 2%, so let's change that to 1%. Leave the dividend there where it is, and we need to cancel our swaps. So Mitsui's done. Sanofi Aventis is next. His income is way up. He's reasonably competent. We can buy Dianpon or whatever he's called. Bargain. Okay, we need another 20 billion here. Okay, so let's see if Bristol Myers is owned 100% by Pfizer. Okay. How much is Pfizer trading for? Too much. Too much. We can pick up Wyeth Labs here. Alright, he's wholly owned. I guess it's 50-50 since he's not controlled. Alright, Sterling Drug. Okay, so let's take a look at what our futures are. So we've sold short the index, which we think is going to be going up, so we'll cover those. Take our profit. We have options on Kmart that we're losing money on. And Elf Aquitaine, we have puts. that we will cover, and we'll also cover the Kmart ones. Gain of 75. Alright, so now we need 7 billion from Progressive. So we'll give him 14. Alright, we need to slow down our growth. Let's make that 1%. And give ourselves a dividend of $4. We're mediocre, so we need to increase our R&D too. So we're mediocre. Let's go cancel our swaps. All right, so the highest one I see here is 19. So let's go with 20%. Which kills our return, but we can get that back when these guys start running out of credit. The company is engaged in improper, perhaps illegal activity. So there's some kind of scenario going on this guy. Let's split him. Okay, that's it for Sanofi Aventis for now. We're starting to run short on time, so we're just going to do a few more. Looks like these next three should be pretty easy. Although these both say management settings, but I think they're in the same industry, so let's go over and look. Got Imperial Chemicals. And yeah, MSBC is in the same industry. So let's see how much he's worth. He is 4 billion. Wow, he's really discounted. Let's see if we have enough. And we do, so let's buy him and merge him in. Alright. We have enough money to pay off most of the loan. These guys are growing like crazy, and we need to up our R&D. Our growth is fine, our dividend is fine. So let's just make our R&D 13%. There isn't a lot of profit to be had in here right now, but these prices are not that high, so they should come down once they start losing money on swaps. Let's just make sure we don't have any swaps ourselves, which we do not. Our income is still decent, even if it is going down. So, I think we're done here. We just have to basically wait till these guys run out of credit. Let's delete this one, and then we'll move on to our last one for the day, which is United Continental. We're very capable in spending a ton on R&D, so we can knock that down. Our income's way up. We've got a lot of cash. Let's see if we can add to our market share. Both the ones that we would want to add are owned. Let's see how much he's owned. Okay, so we could buy a controlling share, but we couldn't buy him outright. On this other one, we can buy the majority of him if we want to, but he's got swaps, so his price should come down when he starts losing money. So I think all we want to do is lower our R&D to 6%. No growth and no dividend. We can have a dividend. Let's give ourselves a 70-cent dividend. Income's going up. We're very capable. Got a decent market share. And we will get bigger when these prices come down. You guys don't have a ton of credit. So shouldn't be that long to wait. Okay, so it's December 31st, and our policy is neutral. Oh, it's gone back to easing. Look at there. I must have missed a message somewhere. Went back to easing. That's why our short bond is going all over the place. Just up, down, up, down, up, down. But even with where it is now, we would make a profit because we have the long swaps in place. So it doesn't really matter what the interest rate does as far as we're concerned. Over time, we are going to get larger. We did suffer a loss today. We're down to 60.2 trillion. But that will recover. It's not often you see all these in the red. But it's because we unfroze everybody and everyone's expanding. Let's go and see how much the bank has in business loans now. It was at 2.6 trillion when we unfroze everyone, and now it's at almost 3 trillion. I'd like to get that up to about 5. We've got too much cash. We need to put that to work. Let's put that in. Let's see. Let's go look and see what our loans are. How much do we have in prime versus subprime? We have 6 trillion in prime and 1 trillion in subprime. So let's put another trillion into subprime. And we'll keep this cash on hand so I can spend some of mine. I think we're going to be buying index futures in the next episode. We may sell short gold, and we may be buying silver very soon. All right, so that's it for today. Thank you for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.